Want to understand market structure and start trading profitably all in just 15 minutes? You're in the right place. In this quick session, I'll guide you through the essential mapping techniques that pro traders use to pinpoint entry and exit points with confidence. By the end, you'll have the tools to apply market structure mapping in your own trading and start seeing results. Stick with me and let's dive straight in. Before we move on to the price charts, we're mapping up that market structure. Let's first understand how you're going to map out the areas of an uptrend and a downtrend. Now first, let's look at the uptrend in a market. An uptrend is going to create those higher lows in the market and those higher highs. And we're going to map out those uptrends at these points in the market to create your mapping of market structure. Now when we look at the downtrend in the market, they're going to create those lower highs down to those lower lows, and we're going to map out those areas. As you can see here again, we're going to map out those lower highs and lower lows when we're looking at a downtrend market. Understanding this technique, okay, with the uptrend and the downtrend is going to help when mapping out those market structure levels. Now we've got that out of the way, let's go over to the price charts and we'll go through exactly how you can identify these quickly on the chart and start finding those profitable trades in your trading too. So we're going to keep this nice and simple. I'm going to start off on a monthly time frame and we'll work down through time frames to see how we map up those charts. Now, if you're new to market structure or you've been trading market structure for some time and you still struggle with this concept, then drop me a comment below and let me know exactly what you're struggling with. So when we look at mapping out those structures, we're going to look at this move here on the pound US dollar on a monthly time frame. And what we're going to look at, we're going to look at this downtrend. So we're going to mark out where we're seeing those highs in the market on the way down as we break structure. Let's go from this previous high. This is going to create that high in the market, which is going to be a higher high when we see a break to the upside, shifting through this level here. So just mark this out as a break of structure. So quite simply, we can identify from this higher low to this higher high is that uptrending market. Now, once we see a shift of this previous structure low, again, that's going to be a break of structure to the downside. It's going to create a new low in the market. And this is where we can potentially now see the start of that new downtrend. So we've gone from this high to the lower low in the market. So after a lower low, we're looking for that pullback to create a lower high. Now we can identify this is indeed that pullback phase where we create the lower high. Now this is going to be a new break of structure to the downside once again. So we've gone from this upwards move in the market. Let me just mark out where we can identify this break of structure here. So this is our up move of the market to shifting bearish. And it's this point where we can identify pullbacks and we're actually taking liquidity at these highs here in the market. So we're sweeping out of these highs of liquidity and we're running into an area of imbalance above, and then we reverse and we break structure. Now, understanding this for your mapping is what we're looking for. So as we drop down here, we create this low and we pull back to make this new lower high. So again, there is our lower high, new lower high, and eventually we break structure here to downside again. So very, very simple process. You're just looking where we're creating those lower lows, lower highs, lower low, okay, sorry, lower high. So we pull back, this creates a new lower low, lower high, down to a new lower low. Now this previous wick, we ignore this wick here. So this is our push to downside, our pull back, and our break of structure. So again, what do we look for? We look for price now to create a lower high in the market to form a new lower low. So if you're looking at what's actually happening here, we can just mark this out. We have this drop to downside, pull back, breakout of structure, pull back, new break of structure, and now we're creating a new pullback. So potentially what we could see and be forming right now is a new lower high in the market. So you remain bearish with that trend until we see a shift in structure. Now for this to happen is understanding we're going to see a shift of this previous high. So if we were to see a break of structure head to the upside, this would create a reversal in our trend, and it'd be a new higher high in the market. And you'd be looking for a pullback to create a new higher low. So just like we see back here, where we created this higher low in the market, we went to a new higher high, but then we shifted and created a new lower low. And that was the sign of the shift in structure. This is how quickly we can look at mapping out your charts when you're using a market structure. This creates that movement where we can see price shifting into this bearish trend, and you'll be looking for that continuation to run the week low in the market. So that's how we basically look to map up the charts. Now what you're going to do is you're going to apply this to every single time frame, and you'll work through. Now the market structure technique is just one equation with trading. We can then start applying our supply and demand zones. We can also look at applying imbalances and even liquidity in the market. Now if you're not sure, then you should check out the video. It's above now. It goes through the 3 concepts to help you master your trading. I'll also leave that at the end of this video, so make sure you keep watching and you can watch that video next. So this is the easiest way for you to start mapping up your charts. Now I'm going to show you how quickly you can do this without going through step by step we just did there. All you need to do now is start looking at where you see that first break of structure. So there's your first break of structure to downside. Let's mark that off as a BOS. So BOS basically stands for break of structure. Now within these modes, we're going to see internal modes, which is going to be where we're going to have internal structure. Now there's a full video, actually there's a full playlist in this channel that goes through everything you need to know on structure. So I will leave that linked above now if you want to check out more on that. But this is the quickest way for you to do this. Once we see this new low formed, you mark this off and you look for new break of structure. This then identifies the continuation of your downtrend. To start with, you're just looking for where price is going to have to run next. Continue, we then go from this low, we're looking for the next break of structure. So that's all we need to do here. And then finally, we'd have this low forming where we're looking for price to run the low. Now, in this equation, we're going to see this as what we call a weak swing low in the market. And we're expecting to see a continuation now to want to run through this low to continue with this bearish trend. This is all about now understanding mapping up those charts quickly. So now you have this bearish trend marked out, you understand we're in that bearish market, you quickly then go to the next time frame, which would be a weekly time frame, and you'll be able to see where these larger swings are identified. So you can see these big swings in the market. Hey traders, we'll get back to the video in just a second, but listen up. Right now you can join my profit per trade workshop for just £49, normally $199. This workshop is packed with practical strategies on market structure and supply and demand, all designed to help you trade profitably, but hurry, only 30 spots are available each month. If you're serious about taking your trading to the next level, click the link in the description of this video or above now and secure your spot today. Let's get you onto the path to financial freedom. All right, let's get back to the video. Then we can go into these smaller swings and we can do the same thing. What we can identify here, we have this break of structure. Okay, so we'll mark this as an IBOS this time. We then have this break to the upside. That's where we see quickly that shift in structure. So when you're mapping out your charts, we can identify we have a previous high. This is now a lower high in the market down to a lower low. We then shift and this creates a new high. So it's basically a higher high. We pull back. We're looking for a break of this high once again with a continuation with this market. We break out, creating a new higher low to a new higher high. So now we have a downtrend shifting into a bullish trend. And again, as we see the pullback, you look for the continuation of that trend. So now you look for a continuation and again another pullback. You're looking for that continuation again to the upside. Mark this off. So you can identify where we have now this internal structure. Well, I was talking earlier on about mapping those charts. So now if we just map this out once more, we then have this break to downside. And then finally, we're looking for price to run this low. We don't, we actually reversed and continue to push higher right here. and then we pushed out just here again. And then finally, we just now broken down again last week. So now if we was to map this out, we can see we have this downtrend moving. We have a push up, reversal. So now we make that new high, higher low, higher high, higher low, higher high, higher low, new high in the market, and then we reverse to make a new lower low. But then instead, we've been reversed back up again, making a new high, higher low, higher high, and then we're making a new lower low. So you can see it quickly that we shift price in the market. So we do have all this internal within. That's just going to be on the lower time frames. So that's how quickly we can identify. Now we zoom out, we can identify that on a larger swing, those structures, we can identify we are bearish. Okay, quickly mapping up those charts. Then we have the internal here, we can identify we're bullish and then shift it again, now currently bearish. So we now drop down to a daily. We can identify this quite easy. This is now our daily current shift in structure. So currently price is now bearish and we'll be looking for a pullback. Okay, that's the next step. You're looking for the market to want to make that new lower low from this high. Then we're going to create this new low where we're looking for the market now to create this push down, pullback, and a continuation to run this low once again. That's how we look at mapping our structures. So again, we would look at the concepts of an area of supply or an area of imbalance here. We're looking for those trades. But now we can also look at this on the internal move here to downside. And we can start mapping up this last push to downside. Okay, and then this low here. And you'll be looking again, mapping out that internal move. You can see a push down, pull back, push down. And that's all you do over and over again, looking for the continuation. Now, if we drop down to a 4-hour time frame here, okay, let's just mark all that out on the 4-hour time frame so you can identify this area. Now we go down to the 4-hour, you can identify, okay, the trend now in the 4-hour time frame. So we create this high, we make a lower low, lower high, lower low, potential lower high, looking for a new lower low. And that is all you're doing when you're quickly mapping up those charts to understand that directional bias in the market. Now, this is helping you understand how we quickly map up those charts, and you now want to understand how to look to take those entries and apply this together, then again, drop me a comment below, let me know that's what we want to see, and I'll make sure we make this video in the next few weeks. So go away, do an exercise yourself on the price chart, make sure you understand where you're seeing that uptrend and the downtrend using those higher lows, higher high, and lower highs and lower lows in the market to identify quickly where that market structure is breaking. Now, like I said earlier on, there's a video coming up next you can watch on those 3 concepts to help you master your trading, going through with market structure, supply and demand, and imbalances, and make sure you watch that video next.